Welcome to the channel, ladies and gentlemen. Today I've prepared a very beautiful and absolutely incredible situation for you indeed, and our strategy fits in here perfectly in a way that is both engaging and thought-provoking. I'm on the British pound Japanese yen currency pair. A lot of new time frames, and now I'll just show you how it went, how I was thinking. There is a clear downtrend here. We are falling down. The pound was simply falling down. If I look at some D here daily, so here I see that from the perspective of a higher time frame, I have a structure, an abstraction, and there's even a zone here, some support where it's bouncing off. I have a star here, and I also have a nice star here. That's just nice. The potential for upward movement is really good. So from the daily perspective, it's beautiful, beautiful. And the structure we've extracted from this pair. Room to rise beautifully. Here, long position. That space here still has a beautiful potential to rise. And I noticed with that downtrend, with the falling, that from the hourly perspective, from the daily perspective, it's just a corrective phase. And here I have a beautiful rounded bottom formed, and I'll show you. Here I clearly noticed that a rounded bottom started to form. That's just a formation, it's a reversal pattern in the market. That formation has its neckline. That's roughly here. Here we have an impulsive breakout, a retest, and then another retest. If the market breaks the neckline, expect a retest, then go long. He impulsively broke through the non-close, then there was a retest, and then I would trade the price upwards in a long position. That's plan. Now we'll see if that plan comes to fruition or not. The round bottom is here, it's a reversal, and the formation is here. Why wouldn't it come to fruition? So let's see what the price is bringing us. Beautiful impulsive breakout. That neckline is formed by a single candle, which is absolutely ideal. The problem with a rounded bottom is that it often has this little ear here. Brief dip causes issues. You hold a mug, it dips below that zone, causing issues. Wait 4 or 5 hours to ensure it's not a false breakout so it doesn't bounce back. So first, I need to wait about 4 to 5 hours to make sure it's not a false breakout, so it doesn't just bounce back immediately. When the price immediately bounces back, then actually it would invalidate that rounded bottom, and there would be a retest, and it might go downwards. It failed. That rounded bottom, I would trade long on pullback, throwback, and retest upwards. But if that doesn't happen, wait 3-4 more hours. Towards a long position on some retest, pullback, throwback, and retest upwards. So we'll wait those 3-4 hours, 5 hours. We already have 1 hour in. And now we're going to go to 2, 3, 4, 5 hours in that price. It hasn't returned below that zone, so I can set up the trade. So I'll place a pending order to go long. I always place a pending order above that zone, above that neckline. I usually place the stop loss just behind the breakout candle. 2 or 3 pips. Here, I'm a little worried that it might dip down just a bit more, just enough to get me stopped out before the price shoots up. So I'll move it a bit further out. I'll move it a few pips further to safety. So, here we have the stop loss. And I always want the take profit to be 2 to 1, which means 2 to 1 is set. And that's the setup I want to throw. I'll set up the trade and then I won't do anything. I'm just waiting for the result. Either stop loss or take profit. Nothing in between. I don't move or interfere with those trades. I leave it as it is. And so, as the price developed, let's take a look. Still climbing up. Now the price has picked us up. It's retesting that zone. Hey, it dipped a little lower. That's exactly the point why we put it a little lower, because that little beak, that ear is still kind of dipping there, which is quite common in these situations. If it were a classic zone, a classic corrective structure, and it was just a breakout, I would place it behind that candle, but here it wasn't a completely typical scenario. And move on. Come on up, everyone. We're going right now. Let's not delay. We've already kind of had 1 hour, and I'm not doing anything. I don't move to break even. I don't interfere with the stop loss, nor with the take profit. It often happens, because it has already made a higher high, that there might still be a retest of that zone. That means it didn't end with 0, simply I won't interfere. I'll just set it and forget it. I'm waiting for the result. Right now, I'm not doing anything at all. Waiting. There are usually some impulses, then some correction, and that correction, like here, to stay. We're getting closer to that take profit. We're out now. To that take profit, we're already out. We're beautifully out now. Door at home. We have survived. It's simply a standard trade. It's a bit non-standard in that it's a formation, but actually it's a zone that we've impulsively broken through, and we're speculating on the retest of that zone. And then on that move up, a bounce from that zone to the move up. Here, price action worked perfectly, absolutely flawlessly. These are our successful trades. Everyone will succeed. Not every trade works out, but here it was beautifully clear. We recognize that rounded bottom. There was an impulsive breakout through that zone. There was a retest that dipped just a bit below the zone, but it came back and then it went towards profit. So this kind of standard trade, these are the trades that keep me going.